What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see a strong bounce in the stock market across the board. Is the correction finally ending, or is this just another dead cat bounce before another leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go up 1.04% and we did go up on some pretty decent volume, as you can see down here. Now remember, the stock market takes the stairs up and the elevator down, so we can continue to go higher on lower volume because we expect to see higher volume on red days and lower volume on green days, but it's still good to see a high volume green day coming off of a strong support. So that is exactly what we did see today, and we did come off of this strong support just below 429 with over a 1% bounce. Now the bad news is we saw selling exactly where we would expect to see it, where the bears are going to try to hold down below this resistance trend line right around 433. So there is a huge wick above the candle above that resistance level that does tell us sellers were at that level, and we did close below 433.5, which is right about where that resistance level is. So if we continue to see downward pressure starting as soon as tomorrow, we could go down for that next leg lower to SPY levels of 425, or possibly go down for the next leg lower at 419. So if you see a hard rejection at SPY levels 433 and we start heading back down towards the support at 429, we could see a break of that support and continue to go for that next leg lower. So remember, we're in a downtrend until we're not. So you still do need to pay attention to the downside in the stock market, and you can't get overly complacent just because we had one bounce. Now the opposite is also true, and if we do start to see this bounce continuing and we start blasting above SPY levels of 436, that will be looking a lot more bullish. And don't forget, we do have the gap to fill above right around 442, and the bulls will want to fill that gap as soon as humanly possible. The longer that gap stays open, the more pressure the bears have to push the price lower, because the bears know as long as that gap is open, they can continue to sell and short at resistance, knowing the bulls have to fight all the way back up to 442 to reverse the downward trending. So remember, the bulls need to get SPY back over the 50 EMA, which is just above SPY levels right around 439 to 440. And above that, it's very likely that that gap is history and the bulls are going to blast right through it. So the bears want to keep the market down as long as possible, but that doesn't mean the bears are going to win. So if you see resistance start breaking down and you see SPY breaking above 436, you have to start assuming that this could be a lot more bullish market and we could be starting to get ready for another bull cycle. If the bears keep SPY below 433, there's no reason to get overly bullish on this bounce, and I would expect to see 425 or 419. So below SPY levels of 433, you need to remain bearish and you need to expect more downside. And above SPY levels of 436, I think you can get a lot more bullish and you can start raising your risk tolerance, setting your risk at these support levels. The other thing to note on the price action today is we did close back above the 5 EMA, and that is a very small win, so it's not something to put a lot of weight on. However, we haven't been closing above the 5 EMA on this entire C wave lower, so the fact that we're back above the 5 EMA does mean the bulls are starting to gain some traction. So yes, I understand I'm telling you the market could go up or down, but you do need to watch these critical levels. Above 433, we're looking bullish, and a break above 436, we're looking a lot more bullish, and a rejection at 433 and a reattempt to bounce off support at 429 is looking a lot weaker, and we could see those next support legs lower. So watch that critical level at 433 because that will be the battlegrounds in SPY, and we will see whether or not the bears or the bulls start to take over at that level. The other thing I want to point your eyes to is the weekly chart of SPY, and we can see today is already offsetting some of that weakness that we saw on Monday, and we see a lot more neutral looking candle just as soon as one day later. So remember, we can't judge the weekly chart until the Friday's close, and we will look at the weekly chart at the close on Friday. But right now you can see we're regaining the bull trend back, and if the price action could get back above 436, which is our weekly 20 simple moving average, we will not lose the bull trend this week. So 436 on SPY is by far the critical level the bulls want to close above, and the bears will do everything possible to keep SPY below that critical level. So this is definitely a battle between the bears and the bulls to see who's going to win. And the bears want to drive SPY all the way down to the low 400s. And the bulls want to continue to try to get SPY back above 436 so they can start partying up there at 460. So this will be a very volatile week and it will swing both ways. So it's very important you're staying objective and following the price action at these critical levels. So jumping over to the NASDAQ 100 triple Qs, we can see we also had a strong bounce on the NASDAQ 100 going up 1.35%. But again, we're closing below a negative sloping 5 EMA, so we can't get overly bullish just because we had a nice one-day bounce. We did bounce right off of that support level that I told you was a strong support, which was right around 352.5. So right now, you can stay bullish on the triple Qs as long as we're above 352.5. But if we lose that support level at 352, we're very likely going for that next leg lower at 347 or 342. Now remember, the triple Qs have a very nice looking ABC pattern, and we did get a full extension of wave C that equals the full extension of wave A. So this is a textbook ABC pattern, and ABC patterns are corrective, which does mean we could go back to the macro level trend, which is bullish, and we could start into another bull cycle now that we have a completed ABC structure. Now there's always the possibility the C wave extends lower, so if we break down below 352, look for those extensions at 347 and 342. However, if we see the triple Qs breaking back above 360, we will very likely start to knock on the door of the resistance level at 365. And above that, the bulls are going to want to close that gap just below 368. So the bulls are taking back control as long as they're holding above these critical support levels on SPY and the triple Qs. So the critical line in the sand of support for the triple Qs will be right there at 352. The bullish breakout will be above 360 because it very likely means we're coming back up to 365 or 368. And above 368, we're very likely going back into a bull cycle that could take us up to the 388 or possibly even higher all-time highs. So keep in mind, if you're bullish on this market, it's going to take a lot of damage repair because we do have a lot of bearish trending. And as you can tell, all of these moving averages on the triple Qs are negatively sloping. So don't get overly bullish in short time frames. Anytime I'm talking about breaking out to new all-time highs, I'm talking about over the course of a couple of months or longer. And this is not something that's just going to happen in the next couple of weeks. So have realistic expectations when you have a downtrend of this magnitude. It's going to take some time for the bulls to reverse that trend, or the bulls are just going to give up and the bears are going to continue to drive it down for that next leg lower. So your critical resistance is 360 and your critical support is 352 on the triple Qs. On the Dow Jones, we were up 0.92% today. And again, we see the Dow Jones closing back above the 5 EMA and back above that level at 341.8. So the Dow Jones is also seeing a nice strong bounce, and we are holding above that support level right around 339. Remember, below 339, we have support at 336.8, and below that, we're very likely closing the gap at 332. As long as the Dow Jones is trading below 348, there's no reason to become overly bullish, and we do need to get back above that 50 EMA and close that gap to reverse the bearish trending. The Dow Jones does have the full bear trend, but as long as the price action is staying above critical support, there's nowhere the bears can take the Dow Jones lower if the bulls are buying at support. So continue to watch support levels and remember that price action is king, and price action is always going to be more important than trend. Price action not breaking below a critical support tells you the market is going back to bullish, and right now we do see the Dow Jones holding strong above 339. So make your critical support on the Dow Jones at 339 and your critical resistance right around 348. On the Russell 2000, we were up 0.35% today. And again, we still see weakness in the Russell 2000 really going absolutely nowhere, which we're all accustomed to seeing in the Russell at this point. We have had no trend in the Russell 2000 going all the way back to February. So we're almost in a year-long sideways market in the Russell 2000 that could break bear or bull. Right now, we can see we're wedging in a lower high, higher low situation, and that wedge could take us all the way out to the beginning of November. So I really don't expect to see the Russell 2000 going much of anywhere until we either see a decisive break above 227 or a decisive breakdown below 215. Anything in between is just a chop zone, and you still do have support at 219, 215, and 212, and resistance at 222, 224, and 227. Anything in between is just a chop zone, so watch those critical support and resistance levels. On the ARKK ETF, we were up 1.73% today, and we did close back above 109. But remember, on ARKK, we did have a validated double top, where we did see a double top. We did break down below the neckline, and our price target of validation for that double top is down here at 102. So any bounce in ARKK should be sold into or shorted until we get down to 102. And after we get to 102, we could possibly see another bullish bounce. If we can get back above 115.5, the double top price target is canceled out and we could start going back on the bull. Otherwise, I do expect to see ARKK continue to trend lower down towards that price target at 102. On the VIX, we were down over 7% today, but we still do see the VIX in a full bull trend, and we still do see the VIX above 20. So there's no reason to believe that the stock market correction is over as long as the VIX is trading above 20. Remember, we need to see the VIX breaking back down below 18.2 to start thinking that we're back on the bull and going back into a bull market. If the VIX is above 20, expect to see plenty of more volatility, and as long as the VIX is in a bull trend holding above support, you can expect to see more downside in the market as long as we do continue to see critical support levels being broken down. So the VIX right now is telling the bulls to hold off, and this market is still volatile and still correcting, but we could see that change very rapidly. So if you start to see the VIX closing below 20, that will be a bullish indication that we could start to see another bull rally. As long as the VIX is above 20, stay cautious and continue to respect the downtrend. On Bitcoin, we're currently up over 4.4%, and remember that Bitcoin could be leading the stock market higher. We already saw a really nice ABC corrective pattern in Bitcoin, and now we're starting to impulse higher, and we are starting to break out some very critical resistance levels. We have the daily high now breaking out above 49,000, and we're now starting to break above that key resistance level right around 51,000, and we're very close to reattempting to break out of the daily high just above 52,000. If we see Bitcoin breaking out and getting above 52,000 to 53,000, we could see Bitcoin start to run towards 59,000. As long as Bitcoin is looking bullish after completing an ABC correction, we have to keep it in the back of our mind that the stock market could be right behind. Remember, Bitcoin trades 24/7, and it's a great indication of risk on. It doesn't necessarily mean the stock market has to go higher, but if you're trying to front run a possible bottom in the stock market correction, Bitcoin could be flashing all of the signs that you need to go long at this time if you just pay attention to it and you're willing to take on some extra risk. So right now, Bitcoin is looking really bullish, and as long as Bitcoin is above 45,000, I am bullish on Bitcoin, and we're very close to having the full bull trend once that 20 simple moving average crosses back above the 50 EMA. So Bitcoin is looking very bullish, and look for that confirmation breakout right above 52,700. And that could send Bitcoin back up to reattempt to break out to new all-time highs. On Amazon stock, we were up 0.98% today, but we still see a lot of bearish trending developing in Amazon, and we could have that 20 simple moving average crossing below the 50 EMA and have the full bear trend at any moment. We still do have strong support at 3186 and 3136, and I would not get bullish on Amazon until we can break back above 3300 and stay above that level. Remember, we're clearly in a downtrend, and you don't want to get overly bullish on something in a downtrend. So if Amazon gets back up to 3,300 and gets rejected, look for that next leg lower at 3136. Otherwise, the bullish breakout could bring us back up to close the gap at 3452, and we do have another gap up here at 3580. So do respect the breakout if we do get a confirmation and breakout of our resistance trend line. So Amazon's bullish above 3,300, and you have to remain bearish as long as we're staying below that critical resistance, and possibly look for that next leg lower at 3136. On Tesla stock, we were down 0.12% today, and we continue to see Tesla looking very bullish with the price action above all the moving averages in the full bull trend. Remember, if we break out above 800, our price target is 825, and above 825, we're very likely going to reattempt to break out of the new all-time highs. Critical support on Tesla is 765, 761, and our resistance trendline breakout level right around 747. Below that, we have strong support at 732, and as long as Tesla is trading above 732, I think you can stay bullish. But if we see Tesla breaking down below 732, we need to start thinking about the possibility that Tesla is rolling over and going into a correction. On Apple stock, we were up 1.42% today, and again, we still see Apple getting rejected around that resistance level at 142 and closing below a negatively sloping 5 EMA. And we're very close to having the full bear trend if that 20 simple moving average crosses below the 50 EMA. We still have this gap to fill at 137, so it's very likely Apple's just going to rip off the band-aid and come back down to support at 137 before bouncing and going back into a bull cycle. There's no guarantee we have to fill that gap, so don't just assume that gap has to be filled, even though with the current bearish conditions with the trending and the price action, it does look very likely we will fill that gap on Apple before we go any higher. Watch for resistance at 142, 145, and the breakout level will be above 150. On the financial sector, we were up almost 2% today, and we still see the full bull trend with the bullish price action, and it does look like the financial sector is getting ready for a bullish breakout. On the industrial sector, we were up 1.12% today, and the price action is back above the 5 EMA, but we still do have the full bear trend, and we need to see the bulls breaking back above the 50 EMA to reverse the bearish trending. The healthcare sector was up 0.6% today, and we still do see the full bear trend with the price action below all the moving averages, so it does not look like the healthcare sector is done correcting just yet. The energy sector was up 0.58% today and continues to look very strong. We have the full bull trend in the price action above all the moving averages, so the energy sector is officially back into a bull market. So jumping back over the S&P 500, this is definitely an important crossroads that you need to watch closely with the price action at critical resistance. We're very close to knowing if we already hit the bottom and this was just an ABC correction, or if we do have more downside coming and we're going down for that next leg lower. So watch that critical level on SPY at 433, and the bulls really need to break out above that level as soon as tomorrow to start scaring away the bears and sending them home packing. The bears need to hold that level at 433 and drive SPY lower, otherwise the bulls will start to take back control of this market. So stay disciplined and watch the price action and only trade off of very critical resistance and support levels. If you're a bear, only short at resistance and cover at support, and if you're a bull, only go long at support and take your profits at resistance. Don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I do believe with the current market conditions, this is the best time to be a BANC member. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. You can find out all of the details and how to join BANC Trade Alerts by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.